Hello there. Welcome back to Grade 10 Accounting. In this video, we want to look at the preparation of the balance sheet. And our question is got 30 marks. And it's question 5 on that question paper. So we are going to go through the question, then we respond to the question thereafter. The question reads, you are provided with the post-closing trial balance and additional information regarding Livingstone suppliers for the financial year ended 20th February 2017. And then on the required part, in the required part, you are given 5.1, which reads prepare the balance sheet of Livingstone suppliers at 20th February 2017. Show calculations and brackets to end part marks. So this is the information that we are given, that is of Livingstone suppliers. Then we are given a table in the form of a post-close trial balance as at 20th February 2017. So you see that this is the information that we have according to that trial balance that you just need to go through before you answer the question. Then you go to the next page to see what other information pertaining that balance sheet is we have. So we only have this part, which is additional information. That is from information 1 and 2 is additional information. So we are saying here, that's the last part of the question, and we are given that a part of the fixed deposit at AB Bank matures on 30 June 2017. That is 25,000 rands. So what does it mean? It means part of this fixed deposit, which is 25,000, we are going to transfer it and remove it from the fixed deposit, and then we transfer it other current assets, and then put it in the cash and cash equivalent. So it means this 25,000 is going to increase the figure for cash and cash equivalents. So part 2 is saying 100,800 rands will be paid on the loan from South Africa Bank, which is SA Bank, in the next financial year. The loan is capitalized. So what does it mean? It means this 100,800 that we have is going to be transferred to become a short-term loan. Remember, we've got the loan balance that we have there. We're going to subtract 100,800, and then we are left with the net balance that is going to represent our loan. And then the 100,800 will transfer it to other current liabilities as short-term loan. So this is what we have. Since we are told that it will be paid back on the loan from in the next financial year. So that's where the keywords are that are leading us to make that adjustment of putting it or classifying it under current liabilities as a current portion of loan. So we go back to the question and try to see. So what we are going to do now, if you go to our answer section, you'll see that we've got a spaces that we are supposed to fill in to our balance sheet. This is our balance sheet of Livingstone suppliers, balance sheet ended 20 February 2017. So we're given assets, then at the beginning of the answer section, and we've got non-current assets, and we've got fixed or tangible assets as pre-entered, which is 941,108. Then we need to put our financial assets. When we know that financial assets consist of the fixed deposits represent the financial assets. So we're going to go back to the question and try to see what we have in terms of our fixed deposits. So if you come here, you would see that we are given fixed deposit for AB Bank, which is 60,000. Fixed deposit was 60,000. So this is going to represent our financial assets. But if you go to additional information, you still remember there's part of that fixed deposit that's going to be transferred to go under current assets as cash equivalent. So if you come here, where we have that information is saying part of the fixed deposit of AB Bank matures on 10 June 2017, which is going to be in the next financial year. So we are going to remove this 25,000 from the fixed deposit amount. So we're going to say 25,000, we subtract it from figure for fixed deposit that we are given. We try to see fixed deposit, we have got 60,000. So we subtract 25,000 there, and we are left with the net figure for our for our financial assets. So we go to the other section. So on financial assets, we are just going to say as per wiki, we're going to say 60,000. And then we are subtracting our 25,000. We subtract there, you're supposed to get your 35,000 as your net balance for financial assets. Already we know that there are no longer spaces there for non-current assets, which means we are finished on the section of non-current assets. We can now add 947,180. Then we add our 35,000. then the total that we're supposed to get is the total for non-current assets now becomes 982,180. So this is what we have. And then we now go to the current asset section. So obviously, current asset section, we are going to have inventories is part of current assets. We are also going to have trade and other receivables as part of current assets. Cash and cash equivalents describes the main components that we have under current assets. So we start with our inventory. We just say inventories. So inventories, we know that mainly it consists of the traded stock. We can also have stationery as part of our inventory. We can also have consumable stores as part of our inventory. So depending on the question, so let's check out in terms of our question, what elements of stock do we have? If you come here, you'll see that in the trade formation, we are not told anything, but we know that this is the balance sheet at 28th February 2017. So 28th February 2017, that's again the time that we are preparing for financial year end, which is 28th February 2017. So it means the closing stock figure, we are going to find it in the trial balance. Remember, in some questions, you'll be given a trial balance of balances at the beginning of the year. Then the figures for inventory or trading stock will now be given in the additional information. So you have to take note that closing stock or closing inventory is the one that we put in the balance sheet. So here we are going to the trial balance because the trial balance that we are going to trial balance because the balances that we are given in the trial balance are the balance at the end of the year. So they are going to represent our closing inventory. But in the case that you will be given trial balance at the beginning of the year, you will find the figures for closing inventory in the additional information. So let's try to see the figures that we are given here as our inventory. We have got our trading stock 72,400, and then we check for other inventories. I mentioned something like we also have to look for consumable stores, stationery. So if you go down, you'll see that. Let's try to see what we have there. You see that we've got consumable stores here, which is 2,820. So we're going to add it to trading stock 72,400 to get the total for inventory. We check again for stationery if you have it. You see that stationery, there's nothing. So we are just going to add the 72,400, and then we add our 2,820. So we go to answer section. So for inventories, we are saying 22,400. Then you add your 2,820. So we add the two, you are going to get your 75,220. So this is what we get. Then we can continue. And next, remember we said that the main components or elements that we are going to have in terms of our inventory, of our current assets, we are going to have inventories. And then we also have our trade and other receivables. So for trade and other receivables, I'm going to give you the components of trade and other receivables that you have to look for in the question. Trade and other receivables that you have to add together to get the total for trade and other receivables. So we are saying other trade and other receivables, you have to look for trade debtors, part of our trade and other receivables, or we are just talking about the debtors control. Means the same thing. And then we also look for prepayments of expenses. They are prepayments or in advance of expenses. You also have to look for accruals, or owings of income. So all these, if you have them in the question, you just have to add them together to give you the total of trade and other receivables. So those are the items that we're going to check. Let's try to see according to our question. what do we have according to these components that we've just listed. So if you come here, you see that we've got data control is the first figure that we have, 14,800. We are going to edit as our trade and other receivables. And then we check for others like the ones that I've mentioned, prepayments of expenses, accruals of income. We see that accrued income, we have it 3,400. We're going to edit to create two data's, the figure for data control, we add our 3,400 for accrued income. Then we look for prepayments of expenses. We have got prepaid expenses, 3,900. You see them. So we are going to add the three, they give you the total for trade and other receivable. So basically we are saying data control 14,800 here. We add accrued income 3,400. We add prepaid expenses 3,900. Then I will just summarize as such. So go to our answer section. We just mentioned as such. We are now here. We are saying if you put it in brackets here to show the working, I have no space here, but I will just try to make that sure that it's clear. We are saying trade and other receivables 14,600. 14,600. Then we add our 3,400. And then lastly, we add our 2,900. We add the three, then we get our total. The total now becomes, if you add the three there, the total that we are going to get becomes 75,000. We get 75,220. Let's try to see. We're going to get 75,220 is total that we have for inventory. So here 14,600 plus 3,400. And then plus 3,900, we're going to get to 22,100. So here we have got 22,100. So this is our total for trade and other receivables, whereby you're saying 14,600 plus 3,400 plus 3,900. Then lastly, we've got cash and cash equivalents. So here we are saying cash and cash equivalents. So we also have elements that should fall under cash and cash equivalents. So in cash and cash equivalents. So elements of cash and cash equivalents, we are going to have our bank if we have it. We're going to have your cash float if it's there. And also petty cash can also come under cash and cash equivalents. And we also have current portion. Current portion of fixed deposit. If we have got a fixed deposit that is maturing in the next financial year, it's also part of our cash and cash equivalent. So if we have them all in the question, you have to add them all together to get the total that will be going to represent your cash and cash equivalent. So let's see, according to our question, what do we have? We come here in our question and try to see, considering our elements. We see that we have got the bank here, which is 34,100. But we have to take note that it's not only bank that we take bank as part of cash and cash equivalents if it has got a debit balance like this one, it's on the debit side. But if you see bank on the credit side, it becomes a bank overdraft. And it's no longer under cash and cash equivalents, it goes under current liabilities. Take note of that. But in this case, we have it on the debit side, so we include it under cash and cash equivalents. And also have petty cash here, which is 2,500, and also we've got cash floats. So we're going to add them three. And also, if you go to the additional information, we've got a statement in the additional information, which is telling us that part of the fixed deposit AB Bank matures on the 30th June 2017, which is 25,000. So we're going to add it again then. Remember, we removed it from the fixed deposit, but now we are now putting it under cash and cash equivalent. So we add it again, get the total. So basically, that's what we have. So we are saying bank 34,100. We add 2,500 for petty cash, we add 1,000 for cash float, and then we add 25,000 that we have in the additional information. for the current portion of that fixed deposit. So we go there and add those ones. On the other section is our cash and cash equivalent. So I'm just going to try to summarize again so that it fits on my small space that I have there. So we are here. We are saying for the bank 34,100. We are going to add 3,400. And we are going to add 2,900. And then we close. We find we also have we also have that fixed deposit that is now part of our cash and cash equivalent, which is 25,000. So add it like that, the total will come here. So add there, you see that total that you're supposed to get there is 62,600. 62,600. So add the 375,220 plus 22,100 plus 62,600. You get a total for current assets, which is 159,920. So this is what we have in terms of our current assets. Then we are now on the section now we want to calculate our total assets. Remember, to get your total assets, you are going to say total assets is equal to non-current assets, and then you add your current assets. So exactly is what we are trying to do here. We are saying our total for non-current assets, we have got this one, and we add it to the current asset figure total, which is 159,920, and then you get your total asset figure that is going to come here as our 1,142,100, and it's going to be your total asset figure. So this is going to be your first balance figure. Remember, in the balance sheet, we try to abide by the accounting equation. So the accounting equation explains the balance sheet. What does it say? It says total assets is equal to owner's equity plus liabilities. So now we are at the stage of this side of the equation whereby we have calculated the figure for total assets. So this is the balance figure. So this total should be equal to, if you add owner's equity plus liabilities, the total that you get here, should be the same with this total. So this is exactly what we have. So this is what we are trying to do there. So we have calculated the first balance figure, which is 1,140,100. So you see, it has been closed, meaning this balance is not going to affect any calculations that are going to follow. So we have closed it. We say this is the first balancing figure. Then we go to the equity and liability section, whereby the equity and liability section, whereby you are given 630,000, 30,800. Let's try to see what that figure is meaning there. That has been put there. So we are having this equity and liabilities, and we are having a total that we are given there 630,000. So you see that this total is representing equity, or the owner's equity that we are talking about. So we can just maybe remove this and liabilities, because liabilities are here. So this one is our equity. Then for non-current liabilities, we can start from filling in our non-current liabilities now. So non-current liabilities, obviously, we are going to look for the figure for loan that we are given in the question. So if you come here, you would see that the figure for loan that you are given is 440,000. But we are not going to put it as it is, because we have got an adjustment that is there that we read in the beginning of the video, that we said is going to affect that final figure for loan, which is additional information number 2, which is saying 100,800 rands will be paid on the loan. Will be paid on the loan from SA Bank in the next financial year. So we said this 100,800, we are going to remove it from the figure for loan as a non-current liability and transfer it as a current liability as current portion of loan. So we're going to subtract 100,800 from the figure for loan that we are given here, which is, if you check it, which is 440,000. So we got there. So we are here. We are now saying loan, SA Bank, and we are saying in brackets, we are saying it was 440,000 in the trial balance, and then we remove the current portion of loan, which is 100,800. And then the net figure that we are left with is 339,200. And it's also going to represent our total non-current liabilities, which is our 339,200. And then for current liabilities now, we are going to list them beneath there. Remember, we also have trade and other payables. It's the first one that we are supposed to put in. Trade and other payables. And elements of trade and other payables, we can just try to list them. For trade and other payables, trade and other payables. Obviously, we are going to have one creditors control. It's part of trade and other payables. And then we are going to have accruals or owings of expenses. And the opposite is true for income. We are saying now prepayments. Prepayments. Prepayments or in advance of this is now of income. So these are the elements of trade and other payable. So those are the items that we are just going to try to look for in the question. So we go to the question. We know that the creditors control were given it here, 48,900. So one of them. Then you go to look for accrued of expenses. We have it here, 4,100. Then income received in advance, we have it here, 6,000. Then add the three figures that we are given. And also, but if you go to, we also have creditors for salaries. Remember, salaries is an expense, and when it's a creditor for salaries, it means there are salaries that haven't been paid of 12,300. We are also supposed to be to include them. So let's take note of them. So we have four elements of trade and other payables that we have. We have got 48,900. We are going to add our 4,100. We are going to add our 6,000, and then we add again 12,300. So we go there. So we come here. We are saying we are going to do it in brackets so that remember I've got limited space, so I'm just going to make sure that everything fits there. So we have got our 48,900. 48,900. We are going to add our 4,100. And then we are also going to add our 6,000. And then we are also going to add our 12,300. And then the total figure that we are supposed to get there is 71,300. So 1,300. And then this is what we have. And then remember the current portion of loan, we have got that loan amount that we subtracted from the loan, which is this one. It's supposed to come here as current portion of loan. Current portion of loan. So on current portion of loan, we're just taking this figure, 100,800. is our current portion of loss. So we have exhausted our current liabilities. We can now add 71,300 plus 100,800, and we are going to get the total amount of 172,000 is our current liabilities, 172,100. So now we can get total equity and liabilities. So remember, we've got our equity balance that was pre-entered there, which is 630,800. Then from there, we add our non-current liabilities, which is 339,200, and then we add our current liabilities, 172,100. Then we get our total, which is supposed to be 1,142,000, 1,142,100. So as simple as that. So this is what we have, guys, according to the preparation of the balance sheet. And we take note that the accounting equation has been obeyed by this preparation, because our total for this is our total for equity and liabilities, which is the owner's equity plus our liabilities, which is the other side of the equation. We do have a total of 1,142,100, which is the second balancing figure, equal to the first balancing figure of total assets, which is here, 1,142,100, which means our balance sheet is balanced. So this is what we have, guys, according to this video. Let's share the link to our friends who are doing retained accounting. Let's turn off the notification button so that when we upload videos, we are notified of new uploads as we prepare for our exam. As for this video, I'm signing out. We'll meet again in the next video.